The paper market just detonated. In the last 4 hours, over $200 billion vanished from precious metals valuations as silver got smashed 12% straight down and gold plunged toward critical support at $4,150 an ounce. This wasn't some random dip. This was a coordinated hit executed with surgical precision while the Comex boys were still rubbing sleep from their eyes. Silver opened around $88 this morning and got dislocated to $77.40 in a flash. That's not volatility, that's annihilation. Gold, which had clawed its way back toward $5,000 after the January carnage, is now testing $4,850 hard, right on the 200-day moving average that has held like concrete since the big breakout in late 2025. Break that, and the cascade accelerates. The algos are already front-running the stop runs. This is the rigged paper game versus physical reality, same as always. On Comex, they trade millions of ounces of ghost metal, paper promises backed by nothing but margin calls and bank balance sheets. Meanwhile, in Shanghai, the real price, the physical price, is screaming a different story. Shanghai silver closed equivalent to $102 an ounce last session, while Comex was bleeding out at $77. That's a $25 premium, folks, not a spread, a gaping wound. Physical buyers in China, India, the refineries, they're paying up big because they can't get the metal fast enough. The West is dumping paper, the East is hoarding the real stuff. Connect the dots. This wipeout kicked off right after the latest margin hike from the CME, sixth one in 2 months. They cranked silver margins to 18%, forcing leveraged longs to puke positions or face liquidation. Who benefits? The same bullion banks that have been short the metal for decades, JPMORGAN chief among them. They rack up massive paper shorts, then trigger the flush when the specs get too comfortable. This wasn't a coincidence. This was engineered to shake out weak hands before the next leg higher. Look at the open interest collapse on Comex silver, down 40,000 contracts in a single session. That's hundreds of millions of ounces of paper evaporating, but physical inventories barely budged. London vaults are scraping bottom. Comex deliverable is a joke, and Asian demand is still red hot. The disconnect is historic. Premiums on physical bars and coins are exploding. Eagles and maples are going for $10 to $15 over spot in the States, while Shanghai is commanding 25 plus. That's not arbitrage opportunity. That's proof the paper price is a lie. Now the secondary threat rolls in. Geopolitics is about to make this mess uglier. Iran just moved another carrier group into the Strait of Hormuz after the latest U.S. sanctions package. Oil spiked 4% overnight, and if that choke point gets squeezed, inflation roars back. The Fed under Warsh is already signaling no panic cuts. Real yields stay elevated, dollar gets a bid, and that should crush metals further. But wait, higher oil means higher input costs for everything, including mining. Supply gets strangled while demand from central banks, China, Russia, India, never sleeps. They're stacking physical like it's 1933. The paper crash is temporary, the physical squeeze is structural. And don't sleep on the bank failure angle. Regional lenders are already flashing red after the commercial real estate bomb. If one big name starts wobbling, flight to safety flips from paper dollars to real gold and silver overnight. We've seen it before, 2008, 2023, except this time the system is more levered, more fragile, and the metals are already in a secular bull run. The Comex is bleeding credibility by the hour. Delivery notices are spiking, eligible stocks are draining, and yet they keep issuing more paper contracts. It's a house of cards. When the next force majeure hits, or when China demands standing for delivery en masse, the whole facade collapses. Physical will decouple completely, and the paper price becomes irrelevant. 3 key takeaways, and we're out. 1. This $200 billion wipeout is paper market theater. Ignore the Comex headline number. The real price is what Shanghai and physical buyers are paying. Stack accordingly. 2. Gold holding $4,850 support is make or break. If it cracks, expect one more flush to $4,600 before the rebound. But silver's the real powder keg. $25 Shanghai premium means physical is already decoupling. Buy the fear. 3. The rigged system is cracking under its own weight. Geopolitics, bank stress, and relentless Eastern demand are the catalysts. Protect your wealth with metal in your hand, not promises on a screen. The reset is coming. Stay frosty.